there's a few simple facts that you just simply cannot deny. The thing is, it's actually kind of scary how little. Let me tell you, all of the biggest prop firm traders are doing this. Now, what is the best way to get funded? What are the rules of trading? Number one. What's up, everyone? So when you're trying to get funded, there's a few simple facts that you just simply cannot deny. Whether you know it or not, the truth is that people trying to get funded nowadays are going to be very few and far between. The thing is, it's actually kind of scary how little people actually pass prop firms. Now, that being said, certain prop firms offer you a better chance at getting funded. For example, Blue Guardian with the Guardian Protector, which gives you the tool to stop you from hitting your max daily drawdown. So it cuts you off just before you hit that max daily drawdown, and you get to decide, hey, I only want to lose 1%, 2%, 3% for the day. And that can really help you stop hitting that max daily drawdown, which oftentimes is the reason that people fail their accounts. Now, what is the best way to get funded, and what is the whole process like getting funded? So in this video, I'm going to go over what it's like to get funded and what the process is like and the simple secrets behind getting funded. And I'm going to reveal a whole bunch of secrets that I've kept pretty close to my chest about getting funded and this whole prop firm trading industry. Now, one of the first things you need to know about the prop firm industry is that very little people pass their evaluations. This is just a fact. And Blue Guardian essentially allowed me access into their records to see how many people actually pass. And if we look at the statistics, on average, each phase has between 5 to 12% pass rate. So if we do the maths, right? Phase 1, we have, let's say, a 12%, 10% pass rate. So let's make it 10%. Phase 2, however, we've then got maybe 10% of that passes. Now we've got 10% of 10%. And of those few, only a small number, maybe 30%, from the average that I've seen on the records that Blue Guardian provided me with, 30% of those get funded. Now, this, believe it or not, is actually pretty high compared to other prop firms. So that's one thing you need to know. If a prop firm is A, not being transparent with you and giving you these figures up front, which Blue Guardian does. In fact, I've created a couple of videos that you can have a look at in Blue Guardian's channel where we go through the stats, and I'll continue to do that every month, going through the stats of exactly how many people pass each phase and how many people actually got paid out. All right. And I think that's important. I think transparency is very important when you're looking to trade with a prop firm. Pick a prop firm that is transparent and open with you at all times, not one that is trying to create this, oh, I'm going to become rich and wealthy from trading with prop firms, because let's be honest, the reality isn't always like that. Okay, you need to be skilled, you need to have a good strategy. So the reason that people struggle so much with getting funded and why so little end up getting their payout at their live funded portion of their challenge is simple. They just can't follow the rules of trading. Okay, what are the rules of trading? Number one, this is key. Have a strategy that is backtested, that you have data on, that you've collected over weeks and months, okay, and at least have 2 years worth of data on your specific strategy, on your specific pair that you trade. That's number one. Have a strategy that has data, okay? The other thing with this step is you want to make sure that you collect the data yourself. Now, there's a lot of people, when I release a strategy online, that come to me and say, hey, give us the records for the last 3 years. Okay, but if I give it to you, how are you going to know that this is profitable? How is your brain and your subconscious mind going to know that a strategy is truly profitable? And when you come to those drawdown periods, and they will come, all strategies have drawdown periods, you're going to start to panic because you did not go through the effort of backtesting this particular strategy. So make sure you have a strategy that has data and that you yourself backtest that data. Don't just go straight into the live market and trade it. Okay, now the second part of this journey takes us to trading live, but not just trading live, trading demo live. So when I say demo live, you're going to be trading a demo account that is obviously simulated conditions, but it's going to be as close to the real deal as possible. You're going to go through some of the emotions, firstly, of trading live with a live account. You're going to go through the emotions of going through drawdown. You're going to go through the emotions of winning trades and going into profit. Once you're able to prove that you can handle those emotions, firstly, you're now one step closer to being able to tackle a real prop firm challenge. The next reason for trading a demo account live as this next part is simple. You need to be able to find out if the strategy is practical for you to execute. And what I mean by this is, does it fit around your lifestyle? Does it fit around your to-do list for the day? For example, I need to go to the gym early in the morning. Can I trade London session? No. Then I need a strategy that works on New York session. I'm very busy during the day, so I need a strategy on the higher time frame so that I can set alerts and then allow the alerts to go off. And I don't need to be on the screen all the time. I can simply check the charts every 15 minutes once my alert goes off to see if my entry criteria is met. Also, I'm only trading these sessions with a very limited amount of time to trade. And so there are different strategies that accommodate these different parameters. Some people want to be on the charts a lot, and other people just simply can't. And you can start to migrate to being on the chart more once you're able to, for example, stop working as much or quit your job, which is something I don't recommend everybody to do unless you really have to. And then the next phase is budgeting. We cannot treat prop firm trading as a lottery. Every time you buy a prop firm challenge, you cannot go out and just say, this is the challenge that I pass and I get my withdrawal and I change my life. Because chances are, it's most likely not. You're going to take at least a few attempts to pass this challenge, okay? Especially if you're being quite aggressive, okay? However, with the introduction of no time limit challenges, it really does change the game, because in the past, we had to be more aggressive to trade within prop firms' time limits, okay? And so now with prop firms like Blue Guardian and a lot of the other big prop firms having unlimited time limit to pass, you can now allow your edge to play out without feeling any pressure of time limits. And this is crucial because not every trading month is going to be necessarily a 8% or 10% month. In fact, those are going to be pretty few and far between if you are just risking half to 1%. Okay, and I don't recommend risking more than 1%. Okay, that's another little tip for you. Now, when you get into this portion of budgeting, you need to make sure that you are picking the correct account size, which I've created a video on already. But essentially what it boils down to is you want to pick the correct account size with the prop firm that you can purchase quite comfortably almost every month. And what this does is psychologically puts you into a space of knowing, hey, if I don't make it on this try, I've still got another try loaded for next month. So you've budgeted this. And what this is going to do is allow you the peace of mind that I haven't saved up for 6 months and now I bought this prop firm and everything is put on this prop firm challenge. All the pressure is on this challenge right now. That's not the case at all, because the real struggle is actually getting funded. Okay, getting that 8% on phase 1 and then getting that 4 or 5% on phase 2. Now, phase 2 is a lot easier because it's only 4 or 5%, so a lot less struggle. Phase 1, getting that 8% can be tricky. All right, and that's where this unlimited time limit is good. It allows your odds to really play out and allows your strategy's risk reward and win rate to play out. It's a numbers game at the end of the day. Trading is all numbers. So now you've picked an account that you're quite comfortable with, okay, that you're quite comfortable to purchase. The price is not too high, firstly. And secondly, you're getting a decent amount of capital to play with. Now, this first account, you need to bear in mind, is not going to be a life-changing account. If you can only afford to get a $10,000 account or a $25,000 account, and that's all you can afford to purchase every month, that's fine. That's okay. This account is your stepping stone to bigger things. So you get this account, you spend the next month to 2 months passing this account, okay? Perhaps it takes you 3 or 4 months. That's okay. You've budgeted for that. You've put money aside and said, okay, it could take me 2 or 3 tries to pass this. Okay, there are lots of opportunities to pass, but if you risk manage correctly, what are the chances of you hitting 8 losses in a row or 10 losses in a row, depending on how much drawdown you have, and if you're risking 1%? If you understand what I'm saying now and you've got the unlimited time, let me tell you that this makes your chances a lot higher of passing. So use the unlimited time limit to your advantage. So now it's taken you maybe 3 or 4 months. Hey, maybe you even made it on your first try. You just kept trading your edge and you allowed your numbers to play out. Good for you, you've passed. Now you have a funded account, but your journey is not over. It's not time to celebrate yet. And that's what a lot of people get wrong. They get the funded account and they start to celebrate. They're like, I'm going to be rich. But this is not the case. Once you're funded, what you need to understand that this is also part of the evaluation. Why? Because you're not risk-free yet. You have not gotten your withdrawal back yet. Okay? You have not gotten your fee back yet. Once you get your fee and your first withdrawal, you're not only break even, but you are now in the green by however many percent you made on your first withdrawal. Now, once you're able to do that, now it's time to potentially get excited. So, this is my strategy for dealing with phase 1, phase 2, and then eventually getting funded. So phase 1 and phase 2, you can potentially be a little bit more aggressive. But when you get to the funded stage, you need to make sure to secure your profits quickly and get your fee back as well as get your withdrawal. Now, the big mistake that people make with the third part of funding, which is the funded account, and once you're funded, is that people get greedy. Okay, they see green. As soon as they're funded, they're like, I'm going to be rich. Your brain releases all these endorphins and you're like, I'm going to be rich. And you try to push this account to 8%, 10%, whatever it is. You make your 2 or 3%, which, let's be honest, is enough for you. Okay, that's enough. Why? And why do people do this? There's a key variable that a lot of people miss, and that is that a lot of prop firms make you wait 30 days for your first withdrawal, right? And this is why I really like Blue Guardian. You only have to wait 14 days. So let me give you a scenario. I trade my account. It goes into a little bit of drawdown. I let my odds play out. I then make 1%. I make one more trade. I make 1.5 to 2%. Now, I've now only traded for about 4 or 5 days. What do I do now? It's simple. You let that account sit and you wait for that first withdrawal. When you do this, it does something very important with your brain. It's like being on Who Wants to Be a Millionaire. I know a lot of you know this game show. When you're on Who Wants to Be a Millionaire, you have different levels, and every time you answer a question, you make more money. But you can set your safety net at different levels. What this does, it's you taking the money and going home, okay? However, you've essentially set your safety net at this level, making sure you get money. But the difference is you get to come back and play the game all over again, and now you can make more money knowing that you've now secured your withdrawal and your fee back. I hope that makes sense to you guys. So for our first round of withdrawals with our challenge, we need to make sure that we stick to a small percentage withdrawal to make sure that we get the fee back and that we make sure that we get a small bit of a withdrawal. Now, what do we do with this withdrawal and the fee? Now, what I recommend, take the fee, stick it right back in your pocket. Take the withdrawal, which will be 1 or 2%. So if, for example, you got a 25K account, you are looking at roughly $200-300. Now with this $200 or $300, you can now go and buy a $50,000 account. And now things start to get interesting, okay? Because once you buy this $50,000 account and you pass it using the same method you did before, also you've proven to yourself that you can do it with a smaller account. Now you've got a bigger account. You've passed the account now. You've got 2 accounts. And this is where the game of Who Wants to Be a Millionaire really becomes interesting. Because effectively what you can do now is bank profits along the way up the ladder without having to wait 2 weeks for the withdrawal. So what you do, You trade account A, which is $10,000, for example, if that's all you can afford, or $25,000, and you've got account B, which is $50,000. Account A, you make, for example, maybe 2%, and that's what you want for your month. That's what you want to bank. You bank that amount of money. So guess what? Now you've got that money banked, but you don't need to stop trading and wait because you've got a second account. I hope this makes sense. So essentially you can continue to play the game without risking anything because you've banked on your one account and you've still got another account to trade. So I hope you guys see how much of a hack that is. So when you've got multiple accounts, use them to your advantage, leverage them. Let me tell you, all of the biggest prop firm traders are doing this. Jade Cap, Paladin, Kimmel Trading, all of the biggest guys, I can tell you they're busy doing this. They're leveraging prop firms like this, having multiple accounts, and then diversifying their risk across these accounts. They're not all taking the same trade across all of their accounts. So once you've done that, you've essentially got the framework to build up multiple 6 figures, 7 figures of funding capital, okay? But you need to have the foundation correct, and that is your strategy. How do you build this foundation? You build the foundation on backtesting, on collecting data, and you cannot get somebody else to build the data for you. Somebody cannot just say, hey, this is how the strategy performs, go and trade it, put it on a live market, go and trade your prop firm accounts. That's not how it works. You need to do it yourself. You need to build that foundation so that in your head, you know this foundation is strong enough to hold this big building that you're going to be building from scratch. And I hope that makes sense to you guys. And that's why when a lot of you guys ask me, hey, give me a 3-year back test on the strategy, I'm like, go do it yourself. You've got all of the tools available, and it's going to be useless if I give it to you. I know that it works because I've used it to get funded. I've used it to get withdrawals. I've shown it all on this channel, but it's going to be useless to you because you haven't put in the work. I put in the work, and that's why I got the results. You need to put in the work and you'll get the results too. So if you guys enjoyed this video, a lot of information in it, please do go down below, hit the subscribe button, and then let me know in the comments what you thought about it. I really enjoyed making it for you guys, and I hope this gave you an insight into how it is to build a big prop firm trading career. All right, the simple ingredients is a strategy, a strong strategy that you've backtested and collected data on, and then having a budget to take on prop firms and build it from there. Once you have the budget for small accounts, it's easy to build onto that and create a prop firm trading empire. And that's as simple as that. So cheers everybody. I will see you in the next video.